share capital. We start with share capital. So we have share capital. We have here share premium. Share premium. We have retained earnings or reserves. Retained earnings or reserves. And then we have, in this case here, fair value adjustments. Please write this in full. Fair value adjustments. Fair value adjustments. And then, of course, if this fair value adjustment is for an asset that is depreciable, we shall have what we call depreciation on fair value adjustment, like that. Depreciation on fair value adjustment. So, and remember, we are valuing this particular subsidiary. There is no way you can acquire a subsidiary without valuing it. We've seen we have a subsidiary we have acquired, which is, of course, we acquired 80% of it. 80% is more than 50%. 80% in a company that signifies control. So we are valuing net assets of a subsidiary actually in those two junctures, when you are acquiring it, and then, of course, at the end of the year, during what we call the financial reporting period. So then we are looking at net assets here at acquisition and at reporting. At acquisition and at reporting. So remember, this is for the first subsidiary there, called the PAMBA. Called the PAMBA. So then move very fast, ladies and gentlemen, from the question you're given here. Please go to the share. Does not change. So it will be 2,500 at acquisition and 2,500 at reporting. 2,500 at acquisition and 2,500 at reporting. And 2,500 at reporting. How about when you look at down there, we have, ladies and gentlemen, share premium of PAMBA. Share premium of PAMBA is 1,000. So we have 1,000 here. We have 1,000. Those two items never change. Those two items never change. What shall change is the retained earnings. And retained earnings, what have they told us about retained earnings? They always tell you the retained earnings. They have told us there that retained earnings, when we were acquiring this PAMBA Limited, in this first line there, they told us on 1st October 2020, Pareto Limited acquired an 80% equity interest in PAMBA Limited when its retained earnings was 3,500. So retained earnings here was 3,500. Who can tell me? What do you think in this case was the retained earnings in PAMBA Limited from its statement of financial position at reporting at the end of the year? Who is able to pick that figure from the statement of financial position at the end of the year? What do we have? Thank you so much. We have 52. We have 52, 50, 57.50 actually. 57.50 actually. So here we have 57.50 like that. And then now we go to, let's read the entire thing. Read the entire thing. That the purchase consideration comprised 1,250 million of Pareto Limited shares with a nominal value of 1 and a market price of what year? A market price of what year? 6.8. 6.8. 6.8. Then we are told in note number 2, at acquisition of PAMBA Limited, the only adjustment required to the identifiable net assets of PAMBA Limited was for land, which had a carrying amount of 625 million less than its fair value. According to your understanding, is that a revaluation down or a revaluation up? What kind of a revaluation is that? It is a revaluation up. It is a revaluation up. Why? Because the fair value is higher. That's how we always look at it. The fair value is higher. Don't be cheated with the word less. The fair value is higher because they have told you that carrying value, the book value, carrying value is also known as book value. It is the one that is what year? Lower. So in this case here, the fair value is higher. So we have here fair value adjustment during acquisition. This was 625. 625. Fair value adjustment never changes. Fair value adjustment never changes. It is 625, 625. From there, ladies and gentlemen, we have depreciation on this fair value. Who is that bright student? Who is that bright student who is able to tell me what is this depreciation on the fair value adjustment? And I can see Alice, thank you very much. I'll be able to get back to that. But for now, what is the depreciation on the fair value adjustment? Depreciation on the fair value adjustment. What figure do I pick here? 0. Thank you very much, Grace. Thank you very much, Martin Wambogo. This is land, and land is not depreciable. So in this case here, depreciation of fair value adjustment, of course, we book what there somebody, we book 0. We book 0, actually 0, like that. So remember, it is normally as we progress. So please come there right away, and then you give me, in this case here, the total. So this total is what we shall call the net assets. So is there somebody who is able to add for us and give us the net assets, ladies and gentlemen, here? Is there anybody who is able to add for us and give us the net assets of Pamba at acquisition? Net assets of Pamba at acquisition. Anybody who is able to do that? According to Barker, it's 56.76. Sorry, there is something I need to correct. I'm being told that the retained earnings here for Pamba, they're supposed to be 52.50. Is that correct? Retained earnings for Pamba. Can somebody in this case here talk to me? Retained earnings for Pamba. For Pamba. I'm being told it's 52.50, not 57.50. From the statement of financial position of Pamba. 52.50. Thank you so much. Then could you kindly come and add everything here? Add everything here. According to Barker, he is getting 93. He's getting 93 ED 93.75, like that. Now, ladies and gentlemen, could you kindly be very, very nice to me today, as you have always been? Now, once you have gotten these net assets of this subsidiary of yours at acquisition and at reporting, we need to calculate something very special. Is there somebody who is able to remind us what are we supposed to calculate once we have this and this? The post-acquisition profit. Papa, I like that, Mutevia. Great. So come here, they are telling me, Mwalimu, that growth in net assets is what we call the post-acquisition profit. So in this case, I need to come and get what we call the post-acquisition profit. So you take the net asset at the end of the year, which is 93.75, minus, in this case, net assets at acquisition, 76.25. So is there somebody who is able to give me this part? So this part, according to Barker, is 17.50. Can someone else, in this case, a second? Barker's value there. 17.50. Thank you very much. Now, you guys are the ones who are guiding me. You guys are the ones who are guiding me. Once in this case here, I get this papa, we call it post-acquisition profit. What should I do with it immediately for a free mark? What should I do with it immediately once I get this pop, post-acquisition profit? We distribute it, we share. We have got two owners. We have got the controlling owner, the parent, and then of course we have the non-controlling. The ones we used to call in the old standard, we used to call them minority interests. So you go ahead and subdivide these. So in this case here, come here and tell us out of this 1750, the controller, out of this 1750, the controller, who is the parent that they are calling Pareto. Pareto gets 80%. 80% of that 1750. Is there somebody who has an answer? Is there somebody who has an answer for this? Again, this Bariki guy does not cheat. It's 1400. Thank you very much. And then, of course, we have the non-controlling, what we call the NCI. So NCI will be getting what percentage? NCI will be getting what percentage? NCI, if the controller is 80%, the non-controlling now becomes what here? 20%. So 20% of 1750, which gives me how much? 350, I'm being told. Thank you. So that the total here becomes 1750. Thank you very much. Ladies and gentlemen, you know now we are coming to the end of this group consolidation. Because today I'll be able to do what we call disposals. What do we do here today's disposal? We are going to see in the next part where we're being told here that we are disposing. After disposal, then I have piecemeal acquisition, same concept. From there, I do one question on this foreign subsidiary. We are in Kenya here, and we happen to be having a foreign, or rather a subsidiary in a foreign country. So then, once we are now at this stage, you guys should be able to advise me. Once I've done these net assets of the subsidiary, assuming I'm not even going to read any other thing, Once I've done these net assets of Pamba Limited, what do you think would be the next step for us? What do you think would be the next step for us? I mean, I want to imply here that now you guys are colleagues. You are specialists in this. Thank you so much, Favored. Goodwill. So goodwill is what I want us to calculate. No, now we are beyond. No. You have to know these things. First of all, you do the net assets. You know, of course, I gave you those steps, but you see that at that time you guys were amateurs. But now you are no longer amateurs. You know, first of all, you give us the net assets. There is a very important asset which has been left outside that you must account for. A very important asset that has been left outside that you must always account for, which is goodwill. So after now you are through with these, I hope you guys will be able to remember these figures. Very important for me. I would want us to go ahead and calculate goodwill. I would want us to go ahead and calculate what we call the goodwill. I will be able to give you the workings, and then I see whether there is any student who will be able to compute this goodwill for me. How do we get this goodwill? So to get this goodwill, ladies and gentlemen, this is how we compute goodwill. We take the consideration paid by the parent. So we say in this case here, the controller's consideration, the parent's consideration. The parent's consideration, we put a figure there. And then we have the non-controller's consideration. Non-controller's consideration, this is what we call the fair value of NCI at acquisition. The fair value of NCI at acquisition, and then it will come under less the net assets. You less the net assets of this Pamba Limited at acquisition. This figure that you guys, I will be able to give you, was it 7350? The figure that I sampled, which I told you guys must remember that figure. Is it 7350? Is it 7350? Is it 7625? 76. This one I'm giving it to you. 7625. These I'm giving it to you. These I'm giving it to you. The one that I don't want to give to you is this, and I pray to God this time round, in terms of the consideration given by the parent, may they bring a share exchange. May they not give us the exact amount paid. They should just tell us it is a share exchange that happened, so they can be able to value the shares yourself. And I would want to give you, because this is among the last questions that I'm doing, I would want to give you like a minute to give me these figures. We see how you're computing them. You guys now are experts. You're great ninjas who can now go to a battlefield and fight, and of course we pass. Let's see, 𝑭𝒊𝒔𝒊𝒕, great. They get goodwill of 3,000. Goodwill of 3,000. Goodwill of 3,000. I'm giving them a few minutes. I want especially, let me see there. I can see what Grace is telling me there. Grace is the one who has gone the long way, because I'm so sure these other guys, they're geniuses. They've been able to see from the face of the statement of financial position, and they saw there that the investment in Pamba Limited, is 8,500. That one they have been able to see. Investment in Pamba Limited, that is the consideration they paid, they booked it there. It is 8,500. 8,500. And then these guys have been able to go ahead and they saw how much the NCI is valued at. Ladies and gentlemen, the NCI, we are told in note number 3, that the group's policy is to measure the NCI at fair value. At the date of acquisition of Pamba Limited, the NCI had a fair value of 2125. So this is supposed to be 2125. So they take that this and this, then you subtract 7625, then you should be able to get goodwill. You should be able to get goodwill at acquisition. Is there anybody who is able to give me this goodwill at acquisition? Is there anybody who is able to give me this goodwill at acquisition? Yeah, no. talking to me. $3,000. So remember, this goodwill, just like any asset, it loses value. It loses value. So in this question, are they given as anything to do with impairment? I doubt. Impairment of goodwill? I doubt. So in this case here, for purposes of our just working, we'll just put it like that. And then, of course, we have what we call goodwill at reporting. So goodwill at reporting is 3,000. It's 3,000 like that. 3,000 like that. But now, ladies and gentlemen, please, I would want you to give me your ears. Please give me your ears. Give me your ears. Please give me your ears. Give me your ears. First of all, have you been able to write up to here? Have you been able to write up to here? Great. So now listen. Remember, here they are telling us that the parent, instead of the parent giving out money, the parent gave out its own shares to acquire Pamba. To acquire Pamba, the parent gave its own shares. How much of its shares did it give? Ladies and gentlemen, if you read note number 1, additional information number 1, they are telling us on 1st October 2020, Pareto Limited acquired an 80% equity interest in Pamba Limited when its retained earnings stood at 3,500. The purchase consideration comprised 1,250 million of Pareto Limited shares. Pareto gave out its shares. So what I need to know, when this Pareto company was giving out its shares, you see Pareto gave out shares. How many? 1,250. So I simply need to know the market price per share of Pareto. So in this case here, then these will be 1,250, of which if you continue reading that particular statement, you'll be able to see the market price per share is what here is 6. So it will be 1,250 times what here, somebody, times 6, which will give us how much here, somebody. Oh, they're saying it's 6.8. They're saying Malibu is not 6. 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 It is 6.8, you're right. It is 6.8, you're right. So in this case here, what is 1,250 times 6.8? What is 1,250 times 6.8? It straight away coincides with that 8,500. It coincides with 8,500. 8,500. But again, I'm a very bright student. Whenever the parent issues new shares to acquire a subsidiary, then that would mean automatically that share capital is going to change. Share capital is going to change. And that is why this examiner has gone ahead to give you the par value. What is the par value of these shares? Is there somebody who is able to see the par value? Is there somebody who is able to see the par value? Aha, thanks, Martin. Martin is always a fast student. Aha, they've been able to see the par value. It's given there. It's given. It's 1, yes. So whenever they give me par value, what I will do, I will come here and in this case, ladies and gentlemen, do a further analysis. So I know that par is 1. So meaning that we have now what we call premium. Premium of how much if you're following. Premium of how much if you're following. If par value is 1, the difference is the premium. The difference is so 5.8. So it means that my share capital will be the shares given out to 1,250 times 1. Share capital will be decreasing by 1,250. 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 So 1,250 times 1, which gives us 1,250. And how about in this case here the premium? The share premium will be 1,250 times 5.8, which will give us how much here, somebody, the share premium? The share premium, which will give us what here? 72.50. To give us 72.50. Give us 72.50. If you add like that, you will end up getting 8,500. You'll end up getting 8,500. Where do you think am I going to make use of This 5.8 is from where? It's very easy. You see, the total market price is 6.8. And the examiner has told us the par value is 1. The par value is 1. So if par value is 1, anything extra is premium. So how did I get this extra amount? I took 6.8 minus the 1. I took 6.8 minus the 1, which gave me 5.8. Have I answered your question? 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 Any other question? Because you see, they told us in this additional information 1, that Pareto, the purchase consideration comprised 1250 million of Pareto Limited shares with a nominal value of 1. Nominal value is the same as par value of 1. And the market price is 6.8. The market price is 6.8. So if 1 goes to share capital, then the difference, that excess amount, is what we throw the share premiums account. Is what we throw to the share premiums account. There is somebody in this case who is saying, Mwalimu, you are 2 first. Could be true, but you see, I normally pause in between and ask you guys, are we together? So when you say that we are together, I always move forward. If you have a question at that time, you should be able to say, hey, I have this question. I have this question. So I don't know whether we are together up to here, or where did I lose you? Where did I lose you? Please ask questions. Feel free to ask questions. The problem is that if you get us, let us go on so far. They increased. A very good question from Phoebe there. If Pareto, in this case here, gave out shares to acquire Pamba, the shares of Pamba, they increase. They increase. Remember, Phoebe, share capital rarely reduces. Share capital will remain the same. You only, in this case here, have share capital, for example, figure changing when there is a situation where you need to raise more money from the market. You issue shares. So these guys had no money to pay for Pamba. So instead of getting money from elsewhere and paying Pamba, they gave them more shares. So when you give more shares, your share capital goes up. So when we go to the share capital, and that's why I've done this working much earlier. When we got the share capital, you see, in group consolidation, we normally work with share capital of the parent alone. Share capital of the parent alone. So I'll be taking the old share capital of the parent, I add 1250 to it. And then I'll take the old share premium of the parent alone, I add what here? 7250. Because now share premium has increased. Share premium has increased. Share premium has increased. So then I would want to take a minute to relax a little bit so that you guys can take this minute here to do what you to digest. So with that high speed, is there anybody who has been able to follow really up to where I am? Or is there anybody who would want Mwalimu to start from scratch? Anybody who would want Mwalimu to start from, please feel free. But starting from scratch really would not be an optimal thing unless you pinpoint an exact area. An exact area. Understood. Great. Great. Nasimu is saying that when you add, remember it's not Pamba shares. Maybe Nasimu could have asked that question. It's not Pamba shares we are bringing here. It's not Pamba shares we are bringing here. Just like, for example, if RCM was to acquire Strathmore, God help us. And then instead of paying the shareholders of Strathmore cash, we pay them with our shares. We pay them with our shares. We go to the registrar of companies. We tell the registrar of companies, we had 5 million shares for RCM, but we want to decrease the number. It's allowed. We want to decrease the number. And then that excess number of shares that we have been able to introduce, we do what here? We give them to the owners of what here? Strathmore. You see, it is the RCM shares which are increasing. You can't take shares of RCM and then you add the shares of Strathmore. They are not like terms. It's like bringing a goat and a sheep, and then you say you've got 2 animals. They are not like terms. The shares that I'm trying to increase here are the new shares of RCM that I've issued out. The new shares of RCM that I've issued out. All right. Great. So, ladies and gentlemen, then if you allow me to move to something very, very important, something very, very important. Please look at this question. That same question. I love this question because it's going to help me put down so many things here. Now, look at required A. Look at required A. Requirement A. They wanted us to give them the goodwill arising on acquisition of the investment in the subsidiaries. So we've been able to get the goodwill of Pamba alone. How about goodwill of 𝑑AFU? Let's look at 𝑑AFU. 𝑑AFU. Read note number 4. Note number 4. Pareto Limited had acquired 100% equity interest in 𝑑AFU Limited a number of years ago when its retained earnings amounted to 1750 million. At acquisition, the fair values of identifiable net assets of 𝑑AFU Limited approximated their carrying values, the purchase consideration comprising cash amounting to 5750. Ladies and gentlemen, now we have gone for another organization here. This organization, we acquired what percentage? 100%. Quite easy because we don't have a non-controlling interest. Here it's a full controlling interest. We own 100% of 𝑑AFU. So whenever you're told that you own that kind of a percentage, so long as it's more than 50%, then the parent is the controller. The controller's responsibility will be to get the net assets of 𝑑AFU now. So go ahead and give us the net assets of 𝑑AFU. Go ahead and give us the net assets of 𝑑AFU. Give us the net assets of 𝑑AFU. Is there anybody who is able to see those net? If I were you, because I'm the controller, that is what the rule tells us. The controller, in this case here, must understand the net assets of the controllee. So come here and write there very fast. Net assets of who? Net assets of 𝑑AFU. So in this case here, you're giving us net assets of 𝑑AFU at acquisition and at reporting. At acquisition and at reporting, and then I'll be able to write those things very first. So we have here share capital. So is there anyone who can see the statement of financial position of 𝑑AFU and read the share capital of 𝑑AFU from that column of 𝑑AFU? Share capital, you guys are experts now. You guys are experts now. So share capital of 𝑑AFU, value tells me 2,000. So it will be 2,000 here at acquisition and 2,000 here at reporting. Do we have any share premium for 𝑑AFU? Do we have any share premium for 𝑑AFU? Remember the question for the students who are joining us, it is December 2020, question number 1. Question number 1. Share premium 500, Martin, thank you very much. So 500. Do we have retained earnings? Retained earnings. Is there anybody who is able to see the retained December 2021, December 2021. Retained earnings. You know, for retained earnings, it can't be the same. No. Retained earnings will be different. So retained earnings of 𝑑AFU at acquisition is 1750. How about retained earnings of 𝑑AFU at reporting? Retained, go to this reporting statement. The statement of financial position, that column, go there and read for us. Read for us. Retained earnings of 𝑑AFU at reporting 5750. Now, this examiner is a bright examiner. He has gone ahead to tell you that, hey, whatever fair values in this case that you have here, whatever carrying amount that you have here, were approximately the same as fair values. Carrying amounts you have here were approximately the same as what here? The same as fair values of 𝑑AFU. What does that tell you? 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 When the carrying amounts are the same as fair values, no fair value adjustment. No fair value adjustment. No fair value adjustment. So come here and they give us the totals here. Give us the totals. No fair value adjustment. I like what they're telling me. No revaluation gains or losses. Quite a good examiner. Somebody is asking, what does this mean? If you go to this December 2021, it's not really a meaning. It's a name of a company that we acquired, 𝑑AFU. Go to December 2021, question number 1. So is there somebody who is able to give me the totals here? At acquisition, how much? 4250, 4250, no evaluation, thank you very much. 4250, and then at reporting, what do we have? 8250, 8250, 8250, 8250. So immediately I get this. Immediately I get this. What should I do? I know 4250, not 8250. The first one. The first one is 4250, I agree. How about the second one? 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 Is this figure correct? Yeah, so PAP is 4,000. So PAP is 4,000. So in this case, the post-acquisition profit is 4,000. And I would want, hey, you geniuses, I would want you to tell me what value will the non-controller eat out of this 4,000? How much will the non-controller eat? How much will you guys, you can't be cheated, you're very bright. Here, the controlling interest is 100%. We don't have non-controlling interests. So non-controlling interest will get 0. So the whole of this will go to Pareto, will go to the controller. The whole of this will go to the controller. We don't have NCI. We don't have NCI here. We don't have NCI. So up to here, is the speed okay now? Up to here, have we been able to follow? Up to here, we've been able to do the net assets of DAFU. Thank you so much. Thank you so much. So then after doing these net assets of DAFU, for DAFU, what do you think will be the next step again for DAFU? What do you think will be the next step for DAFU? Alice is asking why 100%? Why 100%? But Alice, you're told. You're told in the question, Alice. You're told in the question. If you read note number 4, Pareto Limited had acquired 100% equity interests. Told in the question, Alice. All right. I hope you've been able to see. So the next thing will be goodwill, yes. The next thing will be goodwill. Please memorize this on my behalf because we have a attack. So memorize that on my behalf and let's see whether we shall be able to get this goodwill correctly. Let's see whether we shall be able to get this goodwill correctly. So come here and mention there goodwill, DAFU. So from there we start with purchase consideration. What basically we call the parents or the controllers, consideration. How much these guys paid in cash? They're great people. They paid in cash. How much? How much was paid? 57.50. Then we have the non-controllers consideration. We have the non-controllers fair value at acquisition. The non-controllers, of course, nothing because here everything is under the controller. So if you wish, you can come and create a row here where you give us the total consideration, but that is really superfluous. We don't need it. So come here and subtract the net assets. Give us the net assets at acquisition. Give us the net assets at acquisition. Is there somebody who is able to remind us? Thanks, Tony. It was 4250. It was 4250. You come and subtract like that, and then you give us the goodwill at acquisition. Goodwill at acquisition is how much? It's 1,500. It's 1,500. Remember, actually, the question was about goodwill arising on acquisition, not at reporting. Good question there. Good question there. Good question there. Good question here. Good question here. So the goodwill that we have obtained up there, should we apportion it between the parent and the NCI? No, that was an old style of doing this. Nowadays, we get what we call consolidated goodwill. Consolidated goodwill. But there are very few scenarios that I normally see at my workplace, which will dictate us doing some form of apportionment. But really, here we are after what here? We are after the consolidate. Don't break it down. You leave it there. Those are the final answers. Those are the final answers. So Evans, thank you for that question. It means straight away the students are trying to understand this thing. Now, ladies and gentlemen, if you allow me, then I'll be able to go and read the next part. This next part is what makes me very happy, because this is really the gist of today's class. So they want us, if you look at the requirement, after doing the goodwill, part B, they want us to give them the gain or loss arising on disposal of the investment in 𝑑𝒂𝒄 Limited as reported. And then Roman 2, the individual financial statement of Pareto Limited. And then number 2, the consolidated statement of profit. I love this. But they want us to give them the gain or loss, which was realized on the disposal of 𝑑𝒂𝒄. 𝑑𝒂𝒄 was disposed. Read note number 5. Read note number 5. Veronica, don't worry about marks really. Read note number 5. Pareto Limited disposed of 60% of its investment in 𝑑𝒂𝒄 Limited. Remember, our investment in 𝑑𝒂𝒄 Limited was 100%. Investment in 𝑑𝒂𝒄 Limited was 100%. Do you still remember that? Do you still remember that? Our investment in 𝑑𝒂𝒄 Limited was 100%. Do you remember that? Yes. Thank you very much. Now we have sold what percentage? 6%. So we are left with what percentage? We are left with what percentage? 40. So if it is 40%, let's talk. If it's 40%, the status of this 𝑑𝒂𝒄 Limited in our books is going to change. It will no longer be called a subsidiary. It will change from subsidiary to what, if you're following? I mean, that is now where the entire thing changes. It becomes very interesting. It becomes an associate. It becomes an associate. So now, hey, here, so many students get a 0. So many students get a 0. So when we go to the last thing, of course, they will need us to do, which I would want you to be doing, ladies and gentlemen, later on, if I just don't finish this, when they want me to do a consolidated statement of financial position. So for example, under non-current assets, I have PPE. So I will take PPE of Pareto. PPE of Pareto. I add the PPE of who? I add the PPE of Pamba. And then I add what at the end of the year? I add what at the end of the year? I add what at the end of the year? I add what at the end of the year? Do the thing only. Do the thing only. Nothing. As if you're saying nothing. You are right. Ladies and gentlemen, in this case here, remember, I can't come and add PPE of 𝑑𝒂𝒄. If I do this, then automatically, as your mwalimu, I'll be an idiot. If I do that as your mwalimu, I'll be an idiot. Do you know why? Because by the end of the year, as at the reporting date, 𝑑𝒂𝒄 is no longer a subsidiary. So basically, it's as good as me going to that particular column of 𝑑𝒂𝒄 and deleting the whole of it, because consolidation is for the parent and the subsidiaries. We don't consolidate associate figures. And all the time, so long as a student had read that 𝑑𝒂𝒄 is 100%, all the time, students don't read further information to see that there was a disposal. Here there is change of status. 𝑑𝒂𝒄 is moving from subsidiary status to an associate status. The moment it becomes an associate, we can't consolidate associates in our group. Am I making some sense? Am I making some sense? I'm so sure if there is a student who has ever sat for AFR, most of the time, these guys have been adding. They add also the associate figures, and then they end up saying, 𝐂𝐶𝐻 is very bad. But there are some people at home who don't look at me, my neighbors, who don't look at me very nicely. They look at me with the eyes of who? They call them witches. There is nothing like that. There is a concept, trust you me. You have not understood yet. there's a concept you haven't understood yet. Sure, I used to add. All right, Anna is asking a very good question. What about DAFU investment? You see now that is not consolidation. That's IAS 28. IAS 28 tells us, now if this is an associate, go, like I showed you in the last class, go outside there as a working, compute that working alone in isolation, and then you bring it as a one figure. It doesn't mean that now, because it's an investment, you start to consolidate. We don't consolidate associates. Let me ask you a question, and I saw this question that's the city. Well, they told us, I'm just using DAFU as an example. He told us that we have, ladies and gentlemen, we had 100% of DAFU. We had 100% of DAFU, but we sold 20% of DAFU. And then, of course, if we sold 20% of DAFU, the remaining interest here is what percentage? 80%. The remaining interest is 80%. The remaining interest is 80%. So in this particular case, what do you think of DAFU there? I need to ask myself, by the end of the year, what will I be calling DAFU? Thank you very much, Sam. DAFU will still be a subsidiary. DAFU will still be a subsidiary by the end of the year. So it will be, because they have only moved from 100 to 80%. 80% is still a position of control. Anything that is more than 50% is a control position. So in this case, I'll still continue to do what you're consolidating. Nothing changes. Abusino is asking me there, Mwalimu, what about in the P&L? In the P&L, remember, the status of this perhaps may have changed from subsidiary to associate on lapsing of, say, 9 months. That this subsidiary was ours for 9 months in the year. So if it was ours for 9 months in the year, what do? We shall be taking 9/12 of that entity income statement items, and then we add. However, we shall get to that. We are not yet there. For now, we are looking at a situation where a subsidiary has become an associate, and we have to recognize it 100% from our consolidations, especially for the statement of financial what year position. I can see what Brian is saying there. Consolidate for the period it was a subsidiary. Yes. Thank you so much. Thank you so much. Great. So I want to give you guys a better sound, because I would want to give you guys a better sound. I have to look for something nice. Let's see what yeah. Great. Guys, to get better sound. Are you able to hear Mwalimu in a much better way? Or is it the same? Great. Thank you. So then I would want us to go straight away to something very special here. Very, very special. Something very special, very close to my heart. I normally use this at my workplace every day. I work for a group consolidation software company. Every day. Not a single day happens without me talking about this. All right. So this is the book that you guys will be getting immediately in a few minutes. This book, a very important book for everybody. Now, disposals in the consolidated financial statements. If the sale of shares causes control over a subsidiary to be lost, if the sale of shares causes control over a subsidiary to be lost, then the treatment in the consolidated financial statement is as follows. Number one, consolidate the incomes and expenses of the subsidiary up until the disposal date. What are we consolidating? Incomes and expenses.
On disposal of the subsidiary, they recognize its assets, liabilities, and the goodwill. Because goodwill now will no longer be, remember goodwill, we normally compute goodwill for what year? We normally compute goodwill for subsidiaries. So you have to recognize its assets, liabilities, goodwill, and non-controlling interest, and calculate a profit or loss on disposal. Recognize any remaining investment in the shares. Like now here we dispose 60%, we are left with 40%. So this 40% is what we call the remaining interests. So recognize any remaining investment in the shares of the former subsidiary at fair value, and subsequently account for these under the relevant accounting standard, which is International Accounting Standard number 28, equity method. Now listen, a holding of 20 to 50% of the shares would probably mean that the remaining investment is an associate, which will be accounted for using the equity method. A holding of less than 20% of the shares would probably mean that the remaining investment should be accounted for under IFRS 9, financial instrument. Now, today we are looking at a situation where control is lost. I love this, where control of a subsidiary has been lost. The following template should be used for the calculation of the profit or loss on disposal. We have disposal proceeds and the fair value of the remaining interest. You give us the total value. And then we have less interest in subsidiary disposed. In the subsidiary disposed, what interest do we dispose? We dispose the net assets of the subsidiary at disposal date. Then we have goodwill at disposal date. Then we have got carrying amount. This does not make a lot of sense to you right now. For you to understand this very well, allow Mwalimu to look at this small example. Illustration number 3, we are rocking. It's called the rock. The rock has held a 70% investment in dog for 2 years. These guys are crazy. They even get very good names. So rock and dog, what do they have to do with each other really? All right. Nevertheless, we are told here that rock has held a 70% investment in dog for 2 years. Goodwill has been calculated using the full goodwill method. There have been no goodwill impairments to date. Rock disposes of all of its shares in dog. So it sold everything. There was nothing left. It's a full disposal. The following information has been provided. We have the cost of the investment. It cost them 2,000. We have dog, fair value of net assets at acquisition, 1,900. We have dog, fair value of the non-controlling interest at acquisition, 800. And then we have the sales proceeds, 3,000. Then we have dog, net assets at disposal, 2,400. So they want us to calculate the profit or loss on disposal in ROC individual financial statements. This is very easy. The easiest thing ever. The easiest thing ever. Because when I make a disposal, I've sold, just like how I sell, in this case here, ladies and gentlemen, some loaves of bread. When I sell these loaves of bread, just a normal thing. Don't complicate issues. So profit is normally revenue minus who? Profit is normally revenue minus cost. So whenever they tell you that they want you to recognize, to calculate profit for the parent company only, profit or loss on disposal, parent only, not group consolidation, parent only, then this is what you do. You look at the sales proceeds, and then the cost of the investment. 2 things only, the cost of the investment. 2 things only. So like these guys, the 70% that they sold the 70% for how much? Is there somebody who is able to remember here? If I share this, this is what they have told us. You can see the cost of the investment is 2,000. Cost of the investment is 2,000. It was 2,000. So the cost of the investment here is 2,000, like that. So what I'm looking at is how much they earn. How much they earn. That's what I'm looking for. So, ladies and gentlemen, when I look at this, they have told me down here, the sales proceeds, 3,000. Sales proceeds, 3,000. Sales proceeds, 3,000. 3,000. So in this case here, these guys made a profit of how much? They made a gain. Again, these are the book again on disposal, again on disposal of 1,000. Again on disposal of 1,000 shillings. So all these other things, ladies and gentlemen, that you are seeing in between here, all these other things that you're seeing in between here, all these other things that you're seeing in between here, like fair value of net assets at acquisition. You know, this is language of group consolidation. It's not language of what we call company reporting. You know, this is company reporting. One company, which is the parent. Like now, ROC is the parent. ROC individual financial statements. So in this case, it is the company reporting only. But now number two, from the group perspective. So from the group's perspective, if you look at the answer is given here, it's very, very easy. The answer is given here, ladies and gentlemen, very, very easy. But now from the group's perspective, now we consider this as a subsidiary. But now before I go there, I would want to know whether, first of all, we have understood the first thing that I've done from the company's reporting perspective. From the company's reporting perspective. From the company's reporting perspective, have we really understood what has happened there? Is there anybody who has seen what has happened there? Because here, for the company's perspective, I'm only looking for two things. How much was realized and how much was the cost of the investment? Two things only. Company's perspective, two things only. How much was received and how much this thing cost us. You subtract. But now when we go to the group's perspective, things will change because now we must talk about goodwill, we must talk about NCI, etc. But first of all, up to here, please give me like this or like this if you have not understood, because I need to move on. All right. From the company's perspective, there is no challenge really. Company's perspective, no challenge really. Great. Thank you very much. Now, oh, my internet, we shall overcome. We shall overcome. Now, ladies and gentlemen, then let's go and calculate. Let's do the first part here, the first part of this question. The first part of this question required the December 2021 one. December 2021. December 2021. December 2021. Part B, where they wanted me to give them the gain or loss arising on disposal of the investment in 𝐸𝒂𝒄 Limited as reported in the individual financial statements of Pareto Limited. You get that? I give you 1,000 bob. So that, of course, is very easy. What matters most is that your speed. Is your speed. So it's companies, Pareto company reporting. It is 1250. The answer is very, very correct. It's very, very correct. It's 1250. It is 1250. It is 1250. It is 12. How comes nobody got this thing wrong? How comes nobody got this thing wrong? It means that you guys, some of you are not following at all. If somebody was following 100%, I'm so sure guys would have messed a little bit. Guys would have messed a little bit. Because in this one, the sales proceeds, ladies and gentlemen, the sales proceeds here, of course, you've been told, we sold the 60% for 4,700. For 4,700. That's what they have told us, for 4,700. That's what they have told us. That's what they have told us. That's what they have told us in this question. This is what they have told us in this question. They have told us, if you read note number 5, Pareto Limited disposed of 60% of its investment in 𝐸𝒂𝒄 Limited on 1st April 2021 for 4,700, when the fair value of the identifiable net assets of 𝐸𝒂𝒄 Limited was 6250. I don't care about that for now, at least for now. So there I'm concerned with the sales proceeds, which were 4,700. And then, ladies and gentlemen, they have told us up there that the investment in DAFU was 5750. The investment in DAFU was 5750. But remember, this 5750 was when we acquired 100%. We have not sold 100%. We have only sold 60%. So the cost has to be protected. We have only sold 60%. So sales proceeds is for 60%. The cost must also be for 60%, because this amount is what we realized by selling 60%. So the cost in this case has also to be matched. So then what is 60% of this? 60% of this, 60% of this, 60% of this, 60% of this, 60% of this. What are we able to get there, somebody? 60% of this gives us 3450. 3450. So then that, in this case here, is able to give us the gain on disposal. The gain on disposal. But remember, this is from the company's perspective. From the company's perspective, the parent company. I like these people because they copy SEC a lot. Once you have gone through that manual nicely, you will get questions in this case that are replicas. Like now, this was quite a replica of what is in the SEC book. So when you subtract, what are we able to get? When we subtract, what are we able to get? 1250, 1250. So in this case, I would want to ask a very honest question to Evans. Evans, I saw you were the first one to get it right, but is it because you happen to be having a revision kit in front of you? Evans, please remember, honesty is very important for any accountant. For any accountant, honesty is the biggest virtue. Is the biggest virtue. The biggest virtue for an accountant. Evans, do you have a revision kit with an answer? Because I mean, you seemed in this case to give us an answer straight. So Evans doesn't have a revision kit. Then can you give us your M-Pesa number? Give us your M-Pesa number. Give us your M-Pesa number. Evans is very honest. Give us your M-Pesa number. We don't have really much of time, really. Great. Thanks, Evans. Great. It's always good for Mwalimu to honor the promise. So we have there 0707 1347 1347 18 1,000 bob. Now you see, we must also take care of what here our beautiful girls around, and all girls are beautiful. Beautiful, of course, their faces are nice and they are beautiful. The hearts are beautiful, yes. So you can't just give the man alone money. We must also give a lady. But now this time round, thanks Evans, this time round, I would want a great lady to cram the formula. Not cram, but understand the formula. And then they use that formula to answer this question. So this is the formula for getting. This is the formula for getting. This is the formula for getting. Now, from the group's perspective, and I think this one somebody must have screenshot this. They have shared this book. It's not in a very good way. Somebody must have taken a screenshot. So I don't think this should be. Now, I want us in this case here to calculate the profit or loss on disposal, but this time round, the profit or loss that will be booked by the group. When they talk of consolidated financial statements, it is the one that will be booked by the group. Can I give you a secret? For the group, you must calculate two very important things. You must calculate goodwill, because group now we talk about goodwill, we talk about NCI. At least those three things must be there. Two things must be there. So if I were you, I would have, for now, as of now, because I've mentioned the word group, then you must, number one, calculate goodwill. you must, number two, calculate NCI at disposal. Okay, so let me do it for you. Let me do it for you, and then I'll give you a different one. You do it, the one that we are talking about. Let me do this for you. Ladies and gentlemen, whenever you hear of accounting for disposals of a subsidiary, from the eyes of the group, not from the eyes of an individual, but at family level, group level. Group is family. Group is family. The first thing in the group that must be calculated is goodwill. So how do we get goodwill? This is how we get goodwill. 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 So to get goodwill, I will be looking for, ladies and gentlemen, I'll be looking for the controller's consideration, parents' consideration. Parents' consideration. I'll be looking for the non-controlling interest fair value at acquisition. So basically, this is the fair value, the consideration by the non-controller. And then I less the net assets, I less the net assets at acquisition. So as the examiner given me the three things, yes, this examiner has given me the three things. This examiner has given me the three things. If you look at this very well, the cost of investment, of course, this is the cost incurred by the parent. It is 2,000. So this is 2,000. Have they given us the cost of this investment for the NCI? For the NCI, yes, at acquisition, they have told us here fair value. No, here, fair value of the NCI at acquisition, 800. 800. So 800 is what I write here. And then have they given us the net assets of this thing called the dog? Called the dog at acquisition. Oh, yes, they have done that. In this case here, we have fair value of net assets at 1,900. All right. So we have here, my internet is not very good. I can see a warning there, but I hope you guys are able to follow. So 1,900. So then are you able to give us, in this case here, goodwill? Goodwill at acquisition. Are you able to give me goodwill at acquisition? Goodwill at acquisition, 900. Thank you very much. So 900. So please, at this one, note that this one is being subtracted. Is being subtracted. So first of all, are we together up to here? 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 Great. So less impairment up to disposal period. No impairments happened. That's what they told us. There is no impairment that happened. So then, ladies and gentlemen, we have here what we call goodwill at disposal. So goodwill at disposal is still 900. Goodwill at disposal is 900. Goodwill at disposal is 900. Can you kindly put your thumbs up like this? Put your thumbs up like this if you're together. Because they told us up here, ladies and gentlemen, they told us up here, and gentlemen, up here they told us, oh, goodwill impairments to date. No goodwill impairments to date. All right. And then, ladies and gentlemen, we go to the other working. This is very important. Whenever you hear of a disposal, you must give us the NCI at disposal. NCI at disposal is very important. NCI at disposal is very important. So go ahead and give us NCI at disposal. So go ahead and give us NCI at disposal. At disposal. So this is very easy. It is net assets at acquisition. Net assets at acquisition. We have net assets at disposal. Net assets at disposal. Net assets at disposal. Those two. Has this examiner given me the net assets at acquisition? Yes. It is the one that we have just used here to calculate goodwill. We have the net assets in this case here at acquisition. Oh, yes, we do. Assets at disposal, 2,400. So it's 1,900 versus 2,400. So 1,900 versus 2,400. 1,900 versus 2,400. So we have here 1,900 versus 2,400. I can double underline it them if I wish. So is there somebody who can give us the name that we give to this difference? Are you able to remember the name that we give to this difference? The growth in net assets is what we call post-acquisition profit. Is what we call post-acquisition profit. And this post-acquisition profit up to disposal time will be 2,400, 1,900. Remember, I don't want NCI at the end. I just want the value of the NCI at the date of disposal. NCI at the date of disposal. So 2,400 minus 1,900 gives me what figure? Somebody here? 500. Is there anybody who is able to tell us the share of the NCI? NCI has got what percentage in the dog? NCI has got what percentage in the dog? NCI has got what percentage in the dog? NCI has got what? Guys are really following. If there is any day, how I wish I was a very rich man and keep on praying for Mwalimu. If I was a very rich man, I should be able to give every student 1,000 bob a year. Please keep on praying for me. All right. Martin is confusing this question with the other question. Martin, here we don't have the parent. The parent doesn't have 100%. Martin, for you to tell me it's 0. The parent does have. Here, the parent who is Rock has 70%. So NCI doesn't have 70. NCI doesn't have 70, my friend. NCI doesn't have 70. NCI has got what percentage here? Brian, NCI doesn't have 70. NCI normally has the little one. NCI has 30%. So please give me NCI share of POP. NCI's share of POP. NCI's share of POP. So CI shares of POP will be 500 times 30%, 150, which will end up giving me 150. Now, let me ask you a question. Once we get this 150, are you guys now able to give me the value of NCI at disposal? Are you able to give me the value of NCI at disposal? Is there anybody who can give me the value of NCI at disposal? $300, right? Abraham is saying 300. Unfortunately, Abraham, I can't give you any cash, even if you're right, because the cash that I have is cash for what year? Is cash for a lady. Sly is saying she's confused. Why should you be confused? This is straightforward. We've been doing this throughout. Net assets at acquisition, net assets at disposal. And then you subtract. The difference you get is what we call post-acquisition profit. And then you share. If you're told that the parent has 70%, Sly, Sylvia, if you're told the parent has 70%, then the NCI has 30%. The two are normally complementary. You add, you get 100%. You get 100%. Also, Vero is confused. Where is the confusion coming from, really? Because to me, this is very basic. Where's the confusion coming from? Perhaps it's because of my speed. Is it for all students? Are there students who are able to follow? Are there students who are able to follow? Perhaps it's my speed, which is very high, which is a very bad thing for all the students. At least I can see one saying I'm able to follow. Following. I think the students who are losing a little bit This could be those students perhaps who have a value of NCI at acquisition. You see, it's not NCI at acquisition. That table we make whenever you're valuing a subsidiary. We talk of net assets at acquisition. And this has been given. These ones have been given. These ones have been given. You can see here, fair value of net assets at acquisition, 1900. I'm only picking these figures. Fair value of net assets at acquisition, 1900. And then we have fair value of these net assets at disposal, 2400. I only picked them directly. I picked them directly. You know, they have, instead of them giving us like a share capital, share premium, they've summarized for us everything here. For your case, of course, for DAFU, you'll have to calculate this yourself, share capital, share premium, fair value adjustments, etc. But for this question, they've given us net assets at acquisition. They've given us net assets at what here at disposal. So I've only subtracted to get what we call post-acquisition profit, which gave us 500. And then, of course, if the parent owns 70%, if the parent has 70%, this is the controller. Then the non-controller must be having the difference, 30%. And here we are only interested in the NCI's share of PAP. So NCI share of PAP, we have 30% of the post-acquisition what year profit like that. I hope that helps somehow. If it doesn't help, you guys have videos after this. You'll be able to watch, I believe. Value of NCI, 300. NCI at disposal, this has been given. NCI at disposal. No. This is what we are calculating. This is what you 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 are calculating. Ladies and gentlemen, for you to get NCI at disposal, this is very good. Very easy. You look at NCI at acquisition. When these guys were beginning, they had 1900 here. They had 1900. And these same guys, their value has gone up. Their value has gone up by how much? Is it 150? Their value has increased by 150. So if you look at NCI, ladies and gentlemen, NCI, in this case here, NCI at disposal is 900. 900 is 950. Let's look at this. Let's look at this. This NCI, when we began, how much do they have? Yes, it's here. NCI at acquisition is 800. Sorry for that. Let me just explain this. So we have here, this NCI, when they began, their value was worth 900, no, not 900, but 800. So we have here NCI at acquisition. NCI at acquisition is 800. And then now we have NCI's share of PERP up to disposal, which you guys have given me as 150. So in this case here, then we have 950 as the NCI at when? Remember this share up to disposal. So NCI at disposal is 950 like that. NCI at disposal is 950. Is not 300. Is not 300. Is not 300. Okay, it's not 300. It's 950. It's 950. It's 950. Now, so after you get this, we have gotten a goodwill at disposal. We have got an NCI at disposal. After we get those three things, now this is what you shall do to get the gain or loss on disposal of a subsidiary reported in the group. It's a very, very easy working, the easiest working. And this is what we shall exactly do. This is what we shall exactly do. Let me know, ladies and gentlemen, once you're able to write up to here. Let me know, ladies and gentlemen, once you're able to write up to there very fast. All right. So the consolidated books of accounts, then what do we have? In the consolidated books of accounts, what do we have? So, ladies and gentlemen, if you have been able to write up to there, this is normally a very easy exercise. It's normally a very, very easy exercise. Normally a very, very easy exercise. What you shall do, once in this case you've been able to write up to there, this is what you shall do. This is what you shall do. For the group, this is what you shall do. For the group, this is what you shall do always. For the group has got the parent and the NCI, don't forget. So in this case here, we shall come, ladies and gentlemen, here. For the group, this is how you do it. For the group, this is how you do it. For the group, this is how you do it. You'll come and look at the sales proceeds. Sales proceeds. Remember, this guy sold exactly 70%. So the parent in this case here got how much? This is for the parent who got this. The parent got how much? Are you able to see the sales proceeds there? The sales proceeds there. Are you able to see the sales proceeds? Are you able to see the sales proceeds? 3,000, right? So in this case here, the parent got 3,000. We shall also assume that NCI sold their shares. We shall assume that NCI sold their shares. So give us the share of NCI at disposal. How much? The one we have just calculated up there. The one that is not 300. The one that is not 300. The one that is not 300 is how much? It's 950. It's 950. And then from there, you recognize the net assets of the sub at disposal. You recognize this. It's no longer yours. The net assets of the subsidiary at disposal, you recognize this. It's no longer yours. How much is it? How much is it? How much is it? The net assets of the subsidiary at disposal, 2,400. Let me just share the document. The net assets of the subsidiary at disposal. The net assets of the subsidiary at disposal. You can see your net assets of the subsidiary at disposal, 2,400. And then the other asset you must always recognize is the goodwill, which existed at disposal. So again, you recognize goodwill at disposal. You recognize it. So is there somebody who is able to give us the goodwill at disposal? The one that we calculated ourselves, 900. So then whatever you shall get here will be called the gain. It will be gain, I can see. Gain on disposal from the group's perspective. Because group is the one who talks about net assets. Group is the one that talks about what here? Goodwill. So take this plus this, you subtract this, you less this. 650. So 650 is what you shall recognize on the face of the income statement of the group. So I would not want you to take the approach. I can see these guys have not taken a very good approach. They haven't taken the approach that I would want you to be following. The approach is a bit complicated here. This is the best approach, the one that I've given you, the one that I normally use at my workplace every day. Because them, they have said you take the sales proceeds, which is 3,000, and then you less the interest in the subsidiary disposed, you take the net assets, you add goodwill, and then you start subtracting. This is quite confusing. The better approach, ladies and gentlemen, is to come and there, recognize what we got by selling 70%. We assume that also, because again, you are leaving them there, we assume that also NCI sold their shares. So they must have sold their shares at fair value at the date of disposal here. So it's a revenue, of course, to them, for the group. And then you recognize the net assets of the subsidiary at the disposal. And then, of course, always remember to recognize goodwill at disposal like that. Then you're able to get this 650, the 650 like that. Okay, so are we together really, or is there somebody who has been seeing others, birds? not 𝐂𝐤𝐻𝑆 birds, the ones that wear spectacles. I think 𝐂𝐤𝐻𝑆 birds must be the owls, the ones which come with bad omens in their family. I will digest the revision. Yeah, they will see everything we are doing at disposal. Everything we are doing at disposal. Everything we are doing at disposal. Small and get this. Great, 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 great. So then I would want us, ladies and gentlemen, to, now this is where the price comes in. This is where the price comes in. This is where the price comes in. I would want us to do this question of DAFU now. You see, for DAFU, what do they want us to do for DAFU? For DAFU, what do they want us to do for DAFU? So for DAFU that we disposed 60%, they want us in the part B required to ascertain the gain or loss arising on disposal of the investment in DAFU Limited as reported in the individual financial statements of the parent company reporting. And then number 2, the consolidated statement of profit or loss. You have done Roman 1. So Roman 2 is what I want you to do for me, is what you want me to do, is what I want you to do for me for our present. And then, of course, C, consolidated statement of financial position. Once you're able to get everything balancing, then again, you should ask for what year? You should ask for our present. Take this seriously. Remember, in AFR, there are basically 3 areas in group consolidation. We have, ladies and gentlemen, this disposal. We have piecemeal acquisition. You acquired 40%, you have acquired 20% more. So you acquired a subsidiary, but piecemeal, in pieces. And then we have foreign subsidiary. And then, of course, we have group cash flows. From those areas, we shall get 40%, 40%, 40%. So once you understand this disposal is the one that is very confusing. The piecemeal acquisition is never confusing. That is the easiest, And also group consolidation, cash flows, not bad, not bad. So you have to take this exercise very seriously. So you are doing the one for the group's perspective for DAFU, which was disposed. And then you ensure that the question is balancing. Now you guys are what here? You are experts. You can cook figures. And again, remember, it's not about balancing really. The most important thing here is for you to do what here? To get as many entries as possible that are what here? Correct. So then I would expect to get your answers on WhatsApp. So is there any student in this case here that has never seen this Mwalimu before? This is your very first time to see this Mwalimu. Any kind of that student here, that you're joining this class for the very first time, and you're getting to see this Mwalimu today. At least one student. Alice, great. So we shall overcome. So this video, I'll be uploading this video on YouTube, and of course I'll share it. Great, I'll share it here. So Ada, you should be able to see how I calculate the goodwill. The same concept really. Same concept that we normally use, the one of calculating goodwill, where we take the proceeds of the parent, proceeds of the NCI, and then you less net assets. So I don't have figures of net assets here, but when you watch the video, you'll be able to see how I calculated it. Very fast. Yep, the book, I'm sharing it right away in the paid group. You'll be able to get that book. Otherwise, thank you very much. I'm looking forward again to teaching you guys tomorrow very early in the morning. So anytime, so dividends. So dividends, of course, ladies and gentlemen, dividend from the group's perspective, dividends that you realize from either your associate, subsidiary, those are fake. They're fake dividends. You normally do OTR, subtract them, but we shall be able to reach there. We may not even do them at all because you see the VNC, how many marks do you have for group consolidation? Talk of 20. And you're supposed to earn them within how many minutes? 40 minutes, maximum, 37 or so. And that's why you are seeing even Mwalimu here is not so keen about balancing any question. I'm so keen on entries. Because if you try to perfect any AFR question, 100%, trust you me, you will repeat. Anytime you take more than, in this case here, an hour to do an AFR question, you should be able to see goosebumps on your hands and, of course, forehead, as usual, but not sweating from the forehead. This AFR is not about perfection. I was getting, in this case here, awards for AFR when I was a student, and I never balanced even a single question. I normally get so many guys trying to tell you that we have cost of control, do this here. No, they are never even marked those things. Never. If you look at marking schemes, these guys, they will always take, they don't look at the total balancing figure. They'll come and mark so many ticks, and then they'll say any 6 at 2. So it has not balanced, but you have got 6, any 6 which are correct. So you'll end up in this case getting all the marks. I've been involved in this AFR, and I know exactly the buttons that we need to do what to press for us to be able to pass. Whatever I'm giving you is enough. The only little challenge with students, like now you'll tell them go and ensure that this question is done. Most of them will not do it. And then you get a question on disposal. If you get a question on disposal and you've not tried it, then automatically you become OTR, you become, ladies and gentlemen, basically you will not be able to do OTR to pass. Thank you very much, Chris. We shall use 11 to 50. It's called, yes, this is called low-hanging fruits. Chris, I would expect to see your answer snapshot, and then we discuss the answer, if you don't mind. They are called low-hanging fruits. So otherwise, I think today, this Mwalimu, we used a lot of energy. He's tired. Let Mwalimu go and relax a little bit. We shall overcome. Thank you so much. Bye-bye. See you tomorrow. Of course, the very new students, I expect you guys to become my students. We expect you to become my students. I mean, who else will teach you AFR like this? Who else will teach you AFR like this? You need to join us. Very important. 0719 525,000 is our number. Bye.